Please.
Right, thank you and good morning. So I guess this topic we're talking about today is the role of digital asset markets in the world of investments. So I guess we all have been looking at digital assets as the future of finance, and certainly 2022 has been an interesting, if not slightly bumpy ride. So I'm going to take you through a bit of a journey in terms of what I think is interesting for all of the people on this call, and let's see where we end up. So maybe a quick bit of background on myself before we get going. My name's Kelvin. I'm the President and Chief Business Officer of Fusang. I've been in the digital asset industry for quite a few years, most notably with a project called Baikal, which was sponsored by CLSA, which was focused on private equity and commercial real estate tokenization. I've also been a regulator with the SFC, driving the market intelligence program, and I'm most well known for a company called Liquidnet and bringing that to Asia, which is the world's most successful and largest institutional dartpool. I also serve as the co-chair for the AFO for Philanthropy and Legacy Group. So if you want to contact me, follow me on LinkedIn. Right, so this is really the tale of two types of digital assets. On the left here we have crypto assets, where certainly in the last, I think certainly since I've been involved in this industry, since 2017 and looking at this, there's always been the question about crypto assets and what is the real valuation. And then on the right hand side, we've really got the digitization of finance, or at least the vision of that. And the fact is that most of finance is still not really on the blockchain. So on the left, with crypto assets, we're really thinking about questionable valuations of crypto tokens. And certainly the big elephant in the room is the fact that most of these tokens had questionable valuation models. A lot of the hype and interest in cryptocurrencies has certainly been driven by what looks or may look like a investment product of some sort. But I guess through smart legal gymnastics, there's always been the illusion of the benefit of an investment without the actual legal terminologies. And I guess that's brought about some of the problems with the current market structure of the digital asset markets, where quite ultimately, when you're buying these tokens, you don't often know what you're really buying. And the fallout certainly in 2022 from whether it was like Terra Luna crashing or the FTX saga, that contagion across the industry, certainly as the legal frameworks in all countries around the world, especially around securities, investments, and client money management are being implemented, it's very apparent that some of these tokens don't have the same legal structures as you would expect as a regular security. And that certainly causes higher or even unknown risks for investors when investing into crypto products. However, obviously the attraction of crypto, certainly for the last 5-6 years, has been extremely high returns or yields that haven't traditionally been as correlated to some of the traditional investment industry that we've seen. I guess that hunger for yield and equity upside in token form has been what's really been driving crypto markets to date. That general lack of governance, though, certainly has shown through in 2022, and we'll talk a bit more about that as we go through this presentation. In traditional finance, which is certainly the world that I came from, you kind of look back and we think, wow, there is not a lot of firms that are sitting on the blockchain. There's been the promise of national stock exchanges moving their clearing systems onto the blockchain. There's been the talks of real-time settlement for institutional finance, but it's not always been really easy. Right now, a lot of the regulated kind of like platforms that are coming into the blockchain space tend to be single-sided platforms. They may have a license, but maybe they don't have a network or the kind of the blockchain network effect to really scale their business, at least not yet. Right now, most securities, kind of stuck on your traditional national stock exchange, very hard to transfer. They don't have the characteristics or attributes like cryptocurrencies, which is one of the biggest attractions to why I guess digital asset markets and digital finance is exciting for everyone involved. Right now, there is no network of financial institutions anchored around a securities exchange, certainly not in the digital space. And there is a lack of standards for current market structure for asset tokenization. So if we look around the world, there are various projects where they have their own methodology and approach and types of assets that are trying to be tokenized. And we'll talk about that a little bit more later in this presentation. So let's just think about where we came from and why everyone got so excited. So, in the very early days, in January 2009, and obviously we've just passed Bitcoin's birthday again, we had the birth of Bitcoin, right? So it took probably until about 2013, 2014 to, for the early movers to really kind of get note of this token. What really got the market going was the launch of the Ethereum platform, and somewhat, I guess the most interesting part was really the first ERC20 token issued on Ethereum, and then the ICO craze that hit in 2017. And 2017 was really a marquee year for getting retail interest into cryptocurrencies. Certainly the move of Bitcoin from 3,000 to 12,000, and I guess all these white papers that were coming up where effectively projects on a white paper with an idea and a vision drove a valuation that people would invest into, swapping, I guess in those days, Bitcoin or Ethereum for whatever native ERC token you were trying to raise funds against. Since then, we've obviously had the crash and burn and reboom of the markets. I think I recall the crashing of the markets came when shorting first was implemented into the market, and then certainly the 2021 rise of all cryptocurrencies was highly driven by the free flowing liquidity from, I guess, all the free money floating around in the money markets pushed out by governments and from just that dollar printing around the world. So what have we learned on this journey so far is with cryptocurrencies, clearly huge interest in the transfer of value through protocols. I guess each cryptocurrency or each blockchain in many ways represents some form of protocol. It's pretty obvious that fundraising has been one of the most exciting parts of cryptocurrencies, but certainly since the ICO boom in 2017, we've never quite hit the highs of the fundraising on a blockchain kind of solution. There are various blockchains out there still attempting to reinvent this wheel. However, as fundraising is typically a securities-based regulated activity, my view is a lot of this will move to more traditional regulated platforms, and it will be really interesting to see how protocols and these regulated platforms interoperate as the market structure changes. So, have we seen a financial system built on a blockchain yet? I think this is still the first innings, if even that, of this market structure. We really haven't really seen any material adoption by the institutions other than some direct investment in cryptocurrencies. And certainly, so why is this the case? And certainly that's the stifling of adoption institutional adoption for cryptocurrencies is quite often stifled by the lack of regulation, and I guess that certainly in the last year the messy failures. But even post all of the dramas that we've seen in 2022, we've still seen and heard many large institutional stories coming to market. So let's talk about the rise of security tokens. So back in 2016, I guess one of the first security token offerings on the Ethereum was Overstock. My own project that I was working on, certainly in November 2018, was sponsored by CLSA for commercial real estate and private equity tokenization. Obviously, the company that I work for now had been working on its own equity issuance. So Fusang's equities all issued as ERC20 tokens, actually on the Ethereum blockchain. There was a project that they were working on for CCB, the IPO of tokenized bonds. So this is a regulated IPO of a tokenized bond. And certainly the other milestone would have been a regulated public offering of Fusang's own shares. You can see other institutional offerings in the market, such as the European Investment Bank's $100 million digital bond issuance, and most recently a 50 million bond issued by UBS. And there are various other institutional stories that I won't go all into. And you can see that there are platform plays from large institutions, and there are other regulated intermediaries in this space, all working on their own versions of security tokenization. So let's just think about this. So where we've come from is the bad actors stifling the market, and what went wrong. We've got the kind of CeFi markets. I guess ironically the promise of blockchain not quite fulfilled yet, where centralized intermediaries, which are unregulated, often calling themselves exchanges, actually look a lot more like broker platforms. So why do I say that? There's quite often these broker platforms are not doing, say, some form of spot exchange only. They may be running margin businesses. Quite a lot of quite a lot of these players have been trading against clients with their own market makers, which is really a huge no-no coming from electronic markets. This, in the traditional securities world, is highly frowned upon and a very poor market practice. So any regulators would stamp down on that straight away. There is a larger conflict of interest, certainly in the CeFi crypto space, where governance or lack of governance, lack of operating frameworks, lack of independent audits, and lack of proficient independent regulators it really exists, right? So we're really so early in the digital asset space that I think the regulators had a hard time to get around some of the problem sets that have materialized in cryptocurrencies. But I can see with if I put my former regulatory hat on, and this is my view, that actually a lot of the traditional finance regulatory frameworks, with some slight adjustments, would actually set the market structure on a much more stable tone and remove all of the bad actors over time. So we've had like fraudulent operators that have stolen client assets and misappropriated client funds. I mean, even in the security space, this happens. So it's not like we can blame this asset class for having bad actors, but certainly the regulation around it has been light touch at this stage. And I suspect that will tighten over time. There's certainly been very poor risk management of a lot of these firms, where client funds has been used by exchanges to access other liquidity. So one thing about cryptocurrencies which is materially different compared to the securities market is just the proliferation of exchanges where there are multiple venues to access liquidity. And in one sense that's created more liquidity for the market, but in the other sense it's created exposure for clients and prudential risk from market to market linkage, which you probably wouldn't see in traditional financial securities exchanges. This is really interesting market development, but I think with proper regulation and proper governance, actually the future of digital finance still looks healthy and exciting as we get to a market structure which interconnects these operators through some form of regulation. As we've seen actually with the Celsius implosion, the lack of bankruptcy protection for client assets has been quite shocking. I think the current ruling is that the client assets were actually part of the Celsius balance sheet, and if you had your investments, staked on the Celsius platform, you probably last port of call before you're going to get your investments back, if you're lucky at all. So it just shows you a lot of the money management of the crypto space is not set at the same standards as the securities and banking space. So I believe that will change materially in the coming years. So where are the institutions in digital finance, right? So adoption has been limited at best. what have we seen so far is most institutions have probably been buying Bitcoin and Ethereum. Most institutions have been buying Bitcoin and Ethereum, or funds have been investing into, Bitcoin and Ethereum ETFs. We've just seen, one of the most interesting ones is we've just seen BlackRock announce that their global allocation fund, so $15 billion fund, its fund mandate has been adjusted just so that it can now invest directly into Bitcoin. So that's quite an exciting piece of news. I remember very early in my career, so some 20-something years ago, when dark pools were first getting going, one of our biggest problems for institutional finance adopting, leveraging the benefits of dark pools was none of the fund mandates allowed them to trade in an off-market exchange or venue. So I see the adoption of institutional finance and certainly the fund industry and cryptocurrencies having similar problems. So seeing one of the first movers like BlackRock move into this space is a huge milestone for the industry, and maybe finally institutions are arriving, and I suspect that once we get one or two of the big players on board, that we will see a huge herd effect, and the current sub-trillion-dollar market cap for cryptocurrencies, which is primarily more than 50% is Bitcoin and Ethereum combined. I think that's certainly that side of the cryptocurrency space will continue to grow. But this is not financial advice, and certainly do your own research, as everyone says. So, what have institutions also been accessing is they've also been entering into the digital space primarily by private and public equities. So what do I mean there? So aside from the public equities for ETFs and some public listed companies, which are there are a limited handful of like mining companies and exchanges and marketplaces that are listed around the world. Most of the other investment has been through private investment, so private equity investments into some form of digital asset industry ecosystem player. Are we going to see more? I suspect that a lot of the institutional players are looking for strategic investments into the digital ecosystem. They either see it as an extension of their current business or a way to reinvent or innovate around their current core platforms. And as I mentioned, so direct tokenization direct token investments has been limited primarily to Bitcoin and Ethereum. Clearly, Bitcoin has its own story in terms of like the general thesis as to why it has value. I won't go too much into that right now. Ethereum has a huge ecosystem of companies that build services and products that create value for the protocol. So in many ways, the valuation model for Ethereum is much easier to explain than Bitcoin. So, and the rest of the cryptocurrency community, I think, is still trying to work out, is it a security, is it a utility token, is it some form of stable token, or is it some other token that has some form of value? My view certainly is that most things that look or smell like a security are gradually being directed that way by most regulators around the world, and I can't really see us going back from that. So, is this all about to change? Well, that's why we're all here, right? So this whole elephant in the room with regards to, can institutions adopt digital assets is really, really interesting question. And rather than me go and explain that, let's just have a quick snippet from Larry Fink at BlackRock.
I actually believe this technology is going to be very important. Look at it. We have been part of a huge revolution in investing through ETFs. We believe that ETFs will be changing the whole way we invest. Many people still use it as a means, people are investing it for indexing. No, the majority of people who are putting money in in ETFs are active investors that are buying exposure. The entire bond market is being transformed as we talk right now. I believe the next generation for markets, the next generation for securities will be tokenization of securities. And if we can have that distributed ledger that we know every beneficial owner, every beneficial seller, we all have our code
Right.
of who's buying, who's selling, instantaneous settlement. And think about it, it changes the whole ecosystem.
Right. So now we've heard from Larry. My view is much aligned to that. The time is now for asset tokenization. The tailwinds for asset tokenization. Let's talk about some of these. So, staking treatment by regulators is heading towards being classified as a security. So, most staking products have been generating some form of yield. In the hunt for yields, I guess that's what's driven a lot of interest into investments into crypto yield generating products. However, they do look like two things. One, they look like some form of security in terms of the benefit that they generate, and they also look like a collective investment scheme. So I believe under the microscope over time that a lot of these products will be put into this bucket by regulators, and we'll have a much more robust regulatory framework around them. This is kind of exciting for investors to get around, because certainly if you think about the products or the platforms like Celsius, had there been better regulation around some of these yield generating products, investors might be able to more easily get their money back, or the intermediary placing the assets into some investment strategy may have taken less risk or had better risk management practices to protect their investors. So tokens without proper bankruptcy protection, this will definitely be looked at much more closely in the light of FTX and Celsius. Certainly, again, it's all about regulation, right legal frameworks, right regulatory handling of client assets and risk monitoring, protect investors. So it's a no-brainer there. Institutional interest in tokenized assets and securities is certainly on the rise. As I mentioned just now, we've got Larry Fink and his firms certainly the fund allocation directly to cryptocurrencies. So clearly still a big believer in cryptocurrencies, and also the talk just now on asset tokenization, that all assets everywhere will become tokenized, and that's certainly exciting for all of the people in finance to be able to see some form of crypto-like attributes in the securities space. I think that will actually be game-changing for markets. We are still in the first innings of security tokenization. The early adopters will, at least the ones that survive, the early adopters will reap the benefits from the next wave of the digital revolution. So the question for you, if you guys are considering investing into the next digital asset market boom, or if you've missed the crypto one, then certainly my view is the future of asset tokenization is going to be the tokenization of securities. So, are you still curious about digital asset markets? I hope this presentation has excited you in some way or form. So what I'll do is I'll do a little bit of an introduction to some of the things that I'm working on right now, which might be interesting for you guys to explore. So Fusang certainly believes in the future of finance in a world where all assets everywhere are tokenized, so that we can own and interact with the value that we own over the internet. And our mission is to build foundational infrastructure and technology that will create this reality. A few interesting initiatives that we kind of kicked off is building a blockchain network for institutional finance, where I guess brokers can seamlessly meet on our platform and interact with each other in a more securities-like nature. We're building an institutional, a tokenization bridge called Token Bridge, which basically allows you to deposit any securities and investment in paper form, where we can issue digital securities on your behalf. So taking the hard work out of tokenized securities and doing that for you. certainly we're helping you with the infrastructure with a regulated platform and a licensed digital securities exchange for you to exchange assets in primary and secondary offerings, and access to a network of institutional, or providing access, sorry, for financial institutions to access alternatives via digital assets. So if you're interested in any of these kind of initiatives that we're working on, please come and have a chat with me after this. And if you want to learn anything more about asset tokenization as well. So a little bit more about our ecosystem. We've got three kind of pillars and one blockchain. So Token Bridge is a platform built for originators and deal makers and asset managers. So if you effectively want to issue your own digital security, this is the DIY toolkit and platform for you to do it yourself. Fusang Exchange is our regulated digital exchange where you can come and trade those assets and build your own private marketplace if you wish to. So you can run a public or private market on this exchange. Blocktree is our wealth management arm where all of the B2C customers of our digital platforms trading and investing from. Blocktree is just one of the brokers sitting on Fusang Exchange, like any other broker that joins our network. Fusang Exchange is our institutionally designed blockchain for clearing and settlement of security tokens and even cryptocurrencies. And if you want to find out a little bit more about that, please come and have a chat with me later. So if you're still wondering how you can participate in the tokenization of assets and how this relates to family offices or your family office, please get in touch with me. I'm sure that we can share and explore certain solutions and ideas with regards to safeguarding of your assets, how to access I guess the digital asset market structure through a more regulated and safer means. And if you're looking at better distribution or new liquidity to invest into some of your current investments and leveraging the power of tokenization, I'd love to have a chat with you. Contact details are on the left. If you have any questions about tokenization, email us at business@fusang.co. And I'm also running actually tokenization or asset tokenization workshops over the next few months. So please contact us via that email address and let me know that you're interested in participating. Follow me on LinkedIn.